Can we trade forex using a 3-moving average crossover strategy? In theory, it looks extremely profitable. But what if we backtest this strategy? Are we going to double or blow up our account? Watch this video till the end to find out. Hi traders, in today's video, we are going to test a simple trading strategy that involves moving averages. This strategy was suggested by one of our subscribers named Asim Azar. I promised him in the comments section to backtest this strategy and share the results and the expert advisor used for free. This strategy is quite popular and it's probably among the first forex trading methods that we have all gone through when we started our trading journey. As usual, we are going to describe the strategy, test it, then share with you the results and our feedback. So make sure to watch till the end to find out whether you should use the 3-moving average crossover strategy while trading forex, stocks, crypto, or other financial markets. Before we begin our video, I would like to thank Asim for submitting this strategy, and I invite you guys to submit yours if you want us to analyze them. I will leave the link in the description box. To be honest with you, I did some intensive research before making this video. On YouTube alone, there are plenty of videos highlighting trading strategies that rely essentially on moving average indicators. They are usually discussed and sometimes backtested. We all know that manual backtesting is not 100% reliable, as traders might miss 1 or 2 trades or manipulate the results to sell the strategy or a course. That's why this video will give you the final answer, as we will be using an expert advisor and run this strategy throughout a time range of 3 years. Let's get started. The strategy is extremely simple. We just need to attach 3 moving average lines to the chart and use them to define the entry, exit, and take profit levels. Before we begin backtesting the strategy, let's describe it quickly. We first need to attach 3 different moving average lines to the chart. We are going to use the simple moving average. If you are on TradingView, you can add them separately or use one of the combo indicators that allow you to add a triple moving average setup to your chart. We are using the simple moving averages of 15, 25, and 50 periods. We can add them separately to make our chart clearer and easier to analyze. You can do the same thing if you are working on MetaTrader. Just make sure to use 3 distinctive colors to help you differentiate the lines. I have assigned the green color to the 15 SMA, the blue color to the 25 SMA, and the red color to the 50 simple moving average. The chart will look something like this. When the 15 SMA crosses above the 25 SMA, and the price is above the red line, which represents the 50 simple moving average, we go long if the following candle closes higher than the previous one. You can look at this example. This is, by the way, the daily chart, so technically speaking, we need to wait until the next day after the crossover to make our decision. And this makes this strategy suitable for busy traders. Feel free to leave any questions you might have in the comment section. We are going to position our stop loss at 200 pips below the entry point, and the take profit will be 400 pips. That's a massive 1-to-2 risk to reward ratio. Let's look at the short setup. Again, that's extremely straightforward. When the 15 SMA crosses below the 25 SMA, we go short if the price is below 50 periods SMA and the following candle closes as a lower price. The risk to reward ratio is the same, honestly. I wanted to aim for more pips as this is a swing trading strategy, and the 200 pips stop loss is super tight and can be triggered especially if we enter the trade before London or New York sessions. But as we will be backtesting this strategy on Euro USD pairs, I think the volatility will be manageable. Before we begin backtesting, let's quickly look at a live example using the replay mode. You can see here that the 15 SMA crossed above the 25 and the price is above the red line. We go long as the following candle after the crossover closed at a higher price. This is a successful trade. Now it's the opposite setup. The 15 SMA crossed below the 25 and the price is below the 50 simple moving average lines. We can see that the following candle closed at a lower price. We go immediately short, and guess what? This is another successful trade. Let's not get too excited yet, as the two examples were hand-picked. We need to backtest the strategy now to see whether it's profitable or not. As usual, we are going to use an expert advisor, which is designed according to this strategy. You can download and use it for absolutely free at the end of the video. Well, we just need to click here and pick the right settings. It's self-explanatory, so no need to go through it. We are going to backtest this moving average crossover strategy using a $1,000 initial balance and 1 micro lot volume size. Regarding the other settings, we don't need to mess with them that much. Simply adjust the take profit and stop loss level. Then we have to choose the 3 moving averages needed for this backtesting. We are going to select 15, 25, and 50 period simple moving average as fast, medium, and slow SMA respectively. If you mistakenly adjust one of the other settings, you can just hit reset and redo the work. Once you're done with the settings, simply click on Start. While waiting, don't forget to give this video a thumbs up and subscribe to help the channel grow. Backtesting your strategy using an expert advisor is the most reliable way to see whether a strategy is working or not. But that's not all. Remember to use your demo account for at least 3 months before you use any strategy with your hard-earned money. Awesome! We can see that the balance has increased exponentially at the beginning of our backtesting process. We managed to double up our initial balance. Then we encountered some continuous losing trades that dropped the equity down. I'm a bit skeptical about this moving average crossover strategy due to this important drawdown. Let's look at the final report. The modeling quality is 90%, which means that this backtesting process was reliable. We have recorded 31 trades in total, and the success rate is 48.39%, which is tremendously good considering the 1-to-2 risk-to-reward ratio we are using. On top of that, we have made a total profit of $488, and we only had 2 consecutive losing trades, which were responsible for the drawdown recorded. Now, let's look at the bad news. The drawdown recorded is almost 70%, which is extremely high. But as you know, it's a detail that could be improved, especially if you have watched the other videos on this channel. At this stage, I won't recommend you using this strategy to trade forex or any other financial markets. The drawdown is high, and we might get a margin call if we get stuck in a series of continuous losing trades. The best thing to do now is analyze the losing trades and find out the reason why they were not successful, and then optimize the strategy accordingly. I think it's worth trying. There are plenty of ways to do that. We can run the same process again, but with the visual mode enabled, and analyze the losing trades once done. Let me know in the comments section if you want me to do that in a coming video, and give this video a big thumbs up so I know you're interested in this topic. Don't forget to check out the other videos on this channel. Happy trading!